Good morning, gang. Good afternoon, good evening, or good night, depending on where you are in the world when you're watching this. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice, for educational purposes only, and it's my view of the markets. And now we've got that out of the way. Right, it's been a while. I know, I apologise, it's been a while, but quite frankly, there's been nothing to update you guys on since the last videos. Okay, since the last videos, you guys know, I've been posting this for a while now. When was this? This was just a screenshot that I found off one of the YouTube videos. This is, this is going back a couple of months. This is going back to when price was here, in fact. So this is mid-March, okay, and we're now in May. And there was no real update to give you guys, so I've not been doing many regular updates because we were still stuck between two major areas of interest. One being this one down here. One being this one here. I didn't care which got hit first. In fact, this one didn't hit. This got front run. And then right now, we are currently in this one. So these are the two major levels to be aware of. And it's been the same since. This is what I've been telling the guys. Yes, we've had intraday trades. We've had low time frame plays out of this. But on a bigger picture, these are the two major sticky zones that we've got. Okay, and quite frankly, they are still the two major sticky zones. Until we get a resolution out of these, there's nothing really to discuss. So what we're going to think about right now. So where are we right now? Well, we are in a huge sticky zone. And it is a large sticky zone, is this. This isn't... A lot of people in trading think that this is nice and simple. We'll come up, we'll tap the golden pocket, and then we'll reject. Or we'll come down here, we'll tap it, just one kiss, and then it'll go. And this is how a lot of people think it works, okay? This is not how I trade. How I trade is I plan out on the chart where I want to do business. So, as I've been saying, this one or this one. This is where I want to do business. I then need to wait for price to come into that area, into that box, and then see if it gives me a setup in the direction that I want to trade. So right now, we've come up into this. Yes, there was a scalp short to be had up here. Okay. Top of the golden pocket, and obviously we did reject, but all we did is come back down to these range lows. Okay. And this, I believe, actually was a low time frame triangle, but that's for the Elliott Wave trader, so I'm not going to run into too much detail with that. And then the balance of that got stopped out in profit because we've still not broken any structure. If we're looking on this, we're looking at 4-hour chart. Have we broken any structure? Ever since effectively this consolidation here, have we broken any structure since then? Doesn't look like we have. So have we seen any true weakness to get any follow through on high time frame shorts or even low time frame shorts? No, we haven't. Scalping against the trend, absolutely fine. But this is what I've been banging on about to the members now for weeks, is the fact that, well, the trend is still pointing up. Yes, it's fine to take counter trend trades, but you need to understand how to do it. You need to understand that you need to be putting your stops to entry very quickly. Quick TP1s. And why do I say that? Because you don't get any follow through. This is the kind of the market where the idiots and newer traders, I'm not just going to say idiots, you newer traders and your influencers, they look like they're smart. They look like the 500 IQ. Because anytime they long something, it likely results in profit. And they don't get stopped out, as long as the stop loss is in a sensible location. When you've got this kind of trending market like this, you get away with everything. You can put whatever pretty pattern on your chart. You do this, the old head and shoulders, the old triangles, the old wedges, all those stuff, the W patterns or whatever you call them. They get away with all this. And they get away with trading the breakout to the upside because it's trending. So when you've got a trending market, this is where everyone thinks they're a genius. We can use these examples here. This here, this patch here, this patch here. Everyone thinks they're a genius in this kind of market because it's trending. Okay, this is where your low IQ people can make some good money. Okay, but it's when you're a smart trader, and this is something that I want to express to you guys. When you're a smart trader, you're looking potentially for that main reversion. Because right now, it's not a place that you take a swing long. Why would you take a swing long here? Could it work? Yeah, of course it could. Bring up to new highs, of course it would. But I'm in a major sticky zone here. I'm within the algo. Okay? What's the algo? Between the 618 and the 786. I'm in the algo. Why would I be taking a long into resistance? Locally, you know, low time frame, there might be setups. You know, if you get a nice little corrective 3-wave pullback that's got lots of confluence, then yeah, you can look for that change of structure and then look for low time frame longs. But again, on a higher time frame, you're in a sticky zone. So what I'm waiting for here is I'm waiting to, you know, do we start to reject here? Do we get above 100k and then start to break some structure? And then it gives us that short opportunity on a higher term time frame, then great, cool, we've got a short. If it doesn't, and it just continues bleeding up and maintaining this structure, then we let it ride up. And there's simply no short trigger. So this is what we do. So we mark out these areas of interest on the chart. And once price comes into it, then we're looking for our entry criteria. If we get that, great, we take a trade. If we win, great. If we lose, it's not a problem because it's a calculated risk. Because we're trading within risk management. So to summarize, and not send all of you to sleep, right now, I am in no interest in taking a high time frame long. I still hold a long from this little low here. And if you check out on X, I've talked through that trade, so you can actually learn from it. Is it a big position? No, because I've taken the majority of this profit. I'm just letting a little runner carry on. And all I'm doing is I'm just trailing my stop loss up. And eventually I do expect that it will get stopped out. But does that mean stop out on full-on reversal? No. I'm just starting to keep my stops quite tight now. Okay, if I do start to see some weakness, then yeah, I'll look for a short trade. Could that be a swing short that comes all the way to new lows? Yes, of course it could. Likewise, could it just be another higher time frame, higher low, and then back up? Yeah. So we're playing both sides of the market, but for now, this is why I want to make this video. We are in a major sticky zone. If we clear this sticky zone and start getting above it, and start getting above 102k, then I'm going to start looking at this 886 next. Anyone that understands how I trade knows that the 886 is effectively, in this scenario, the bear's last stand. Because if we start clearing above the 886, then I do expect new all-time highs. The odds are in favour for that. Does that mean it has to happen? No, but it means that the odds are in favour of a new all-time high. And then you've got to ask yourself a question, what happens at all-time high? Do we just simply take the highs, hang around, and then roll back down? Great, cool, I'll short it. I won't short it up here. But if we do something like this, yeah, of course I'd look for a short. Why not? So that means you've got a lot of breakout traders buying the breakout, looking for whatever made-up number they've got above. And then, if it comes back down below, then these guys are offside then. So what happens if these buyers are offside? What are they going to do if they're offside? Well, they're going to sell. So I might have a short trade there. If I don't get that and it just continues going up, cool, great. Carry on trading the trend on the way up. Likewise, if this does come down lower and we start to lose some of this structure, now bear in mind we have made some nice structure on the way up. There's some nice sticky zones. If I do a volume profile from here to where we currently are, you can see we've got a point of control here. So the first major sign of weakness for me would be losing this point of control, but more realistic would be losing these lows. Then that's when you start to break some structure on a high enough time frame. You start doing that, great, cool. I'll look to trade it down into this sticky cluster here. What happens in that sticky cluster? Do we get a long opportunity? Great, cool, I'll take a long. All I'm bothered about is the opportunities that the market presents. Does it give me a good opportunity? Well, if in that case, then yeah, I'll trade it. Does it give me a bad opportunity? Then I won't take it. It's as simple as that. If it does come down here and then starts to lose this and backtesting this cluster as resistance, well, that's a little bit more bearish. Then we can start looking back down at this green box, which is still valid. So this is how I'm trading the market at the moment. I'm in no rush to take anything high time frame long. I would like to take a short. I need to see that weakness. I'm going to be day trading that. Okay. Hopefully you've learned something today. If you have, do me a favor, hit that like button. And until next time, gang, as you were.